So this is a question that is on a lot of people's minds right now, and it's difficult to just search up actual data to confirm or deny the suspicions on whether a presidential election has a major impact on the housing market. And many people also perceive that a presidential cycle also has an impact on the economy. And while there may be a little truth to that, it's difficult to lay blame for the 2008 financial debacle or COVID-19 or wars on another continent on the hands of the then president. Now, I understand this is a little bit of a sensitive subject, so let's stick to the data and break it down into home sales volume, pricing trends, and interest rate. So the CEO of Lexar Capital Management says it really well. Presidential election years affect national housing market and mortgage rates through three interrelated channels: uncertainty, political expectations, and consumer confidence. And this is because consumers may choose to postpone major purchases or sales until they gain greater confidence in the country's direction. Currently, there is a lot of uncertainty about who is going to win and the direction that they may take in regards to policymaking. Although nothing happens overnight, we still just lack the confidence and overall direction of the country. Looking back, you'll see that our nation is forever wrestling with issues not necessarily caused with the prior cycle's administration, but they're always those of the American people have strong feelings or fears about. And if you look at this right here, in 2008, we certainly remember that global financial crisis and subsequent recession caused by the housing crisis, resulting in the longest economic recovery in history, spanning three separate election cycles. In 2012, there was the fiscal cliff, healthcare expansion by the Supreme Court, and the European debt crisis, carried over into 2016 as Brexit. And if you remember that 2020, the pandemic, which began in one cycle, spilled over into the next couple of years, and right now in 2024, we're still talking about lingering high inflation, dealing with interest rates, plus the multiple wars in the Ukraine and Gaza. It's always something, right? Ali Wolf says, usually home sales are unchanged compared to a non-election year, with the exception being November. In an election year, November is slower than normal. And maybe a month or so leading up to November, people are putting their hands in their pockets and resolving to holding off on major expenditures, such as listing or buying a home. Her comments likely based on the data showing home sales are affected in a presidential election year. This graph demonstrates there's a seasonal drop in home sales from October through November. Always, consumers are busy just adjusting to their fall schedule, prepping for the holidays, and all real estate agents know and feel this every year, but this actually puts the numbers behind it. On the left in the gray are non-election years, 1963 to 2019, and the red is the seasonal drop during a presidential election year. It's a little over 5%, more of a slowdown, not dramatic, but notable. And one of the big takeaways today is that home sales in 9 out of the 11 last presidential elections increased in the year after the election was concluded. Typically, the first year of the 4-year presidential term is the best year for housing, and people are finally saying, okay, whether they got their candidate elected or not, I now know a little more about what to expect and feel comfortable making a move. Now, while we don't have a crystal ball to answer definitively about this year, we do have this from Ryan Lundquist. An election year doesn't alter the price trend that is already happening in the market. So we're currently seeing a housing market that is getting better. It's stabilizing at the moment. Interest rates are slowly declining as inflation is slowing, and that's great. However, a lot of people are wondering about home prices. And since that has been on a continuous upward trend, although not as drastic as that in 2020 and 2021, we can say that based on historical data, this is likely to continue. So the numbers are consistent with Lundquist's statement, illustrating that, with the exception of 2008, home pricing in 7 out of the last 8 cycles has increased the first year after a presidential election. And this is for existing homes. And for new construction homes, 10 out of the last 11 cycles, new home prices increased, again with the exception of 2008. Wolf goes on to explain that in December, following an election, and in the following year, the sales that are lost during November are recovered. And it isn't that consumers are saying that I'm nervous and I never want to buy. They just say, I'm nervous, let's wait to see how things play out. So the final piece of information to consider the impact of is mortgage rates. Interestingly, mortgage rates decreased in the months leading up to an election in 8 out of the 11 cycles, all the way back to the 1980s. And now we don't think that there's necessarily a hard correlation between rates in an election cycle because the changes just aren't significant. But there is a little bit of a trend. And in today's economy, we're hoping and praying for rates to come down. So the bottom line is, as Bankrate puts it, for most Americans, election results will have little direct effect on their income and therefore should not significantly impact their decision to buy or sell our home. And we think this is true, even though the perception may be otherwise. So there you have it. Please rewatch this because I know I went through this very quickly. But most importantly, if you're trying to assess whether you can or should buy a home or put your current home on the market right now, please give me a call, as the decision is highly personal for you, and an expert like me can provide the data specific to your financial goals so you can make an informed decision. Thanks for watching and take care.